It's very likely that you've heard of the term blockchain. Even if we all have a general grasp of what it is, the fact is that most of us have no idea why it's discussed in every innovation and technology forum. Keep in mind that when it comes to your hard-earned cash, we don't claim to be financial experts. So at the end of the day, it's entirely up to you what you do with the information we provide in our content. This video will highlight the most significant blockchain principles so that you can engage in any discussion on the topic without getting lost on the first phrase. Actually, this video will provide you with all of the facts you'll need to begin considering your own blockchain applications. You'll discover what it is and how it functions. But before we go any further, make sure to like and subscribe to our YouTube channel so that you can learn more about how the crypto industry works. A ledger may be the most uninteresting technical advancement ever made. It's nothing more than a transactional list. From sales of chicken and waffles to a record of who owns which properties on your block, a ledger can keep track of it all. Let's use an example to explain to you how it works. Consider an interaction between Shrek and Donkey. Let's imagine Donkey has put $2 in the bank and Shrek has deposited $10, giving the bank's ledger 2 entries to begin with. Donkey goes to Shrek before they go to bed and tells him, "In the morning, I'm baking waffles." Shrek loves waffles, especially when they're topped with a tasty fish gut syrup, so he flops onto his mobile banking app and gives Donkey $2 to help him buy the waffle ingredients. A $2 debit for Shrek indicates that money is leaving his account, while a $2 credit for Donkey indicates that money is entering his account. The account balances of Shrek and Donkey may be assessed at any time by adding up the credits and debits. A credit indicates that money is being added to your account, whereas a debit indicates that money is being deducted from your account. Blockchains at their most basic level are ledgers, similar to the record books used by accountants. How does a blockchain work? There are 2 significant distinctions between Shrek's ledger and a blockchain, one of which is blockchains being tamper-evident, containing data that shows everyone with a copy of the ledger whether someone else is attempting to tamper or edit it. The second is them being able to be distributed, which means that instead of a single trusted third party controlling it, several versions exist. Let's go through each one by one. Blockchains are tamper-evident. A page in the ledger symbolizes a block on the blockchain in our scenario. There is a list of transactions and information linked with them on each page or block, such as how much money is deposited and when it was transferred. In addition, there is information on the page itself. A block contains information such as the total number of transactions in the block and the time the block was filled. Cryptographic hashing. Now, this is the most crucial aspect of blockchains. Each block has a hash, which is a special link that points back to the previous page. A hash is a mathematical function that allows data to be encrypted. Simply explained, you may pass any string of text or data through a hash function, and it will return a 64-digit string of text that appears to be utter gibberish but can be decrypted into something understandable. When a new block is added to the blockchain, all of the data from the block's transactions are hashed into a 64-character output. This 64-character output is then included in the next block, pointing back to the block where it was first generated. This is why it's referred to as a blockchain. It consists of a succession of blocks linked together by a hash function. A hash function may be compared to gluing finished pages together in our ledger book analogy. The hash of a block would change if Lord Farquaad went back and modified a transaction that happened 100 blocks ago. This would update the hash of the next block, and so on, all the way up to the most recent block. Someone fiddling with ledgers isn't cool, but it seems a lot less scary than 450 mass-murdering space asteroids colliding with our planet and transforming everyone you've ever loved into a cloud of cosmic dust. Blockchains are distributed. Instead of a single copy of a record book being kept by one person, thousands of copies of this record book are kept on various computers all over the world. This one is self-explanatory. Which one should we trust? Because blockchains are tamper-evident, we can tell if someone tries to go back and edit the ledger, either on purpose because they are dishonest or accidentally because they are stupid. I mean, we have several copies spread throughout the world. Shrek and Donkey will notice the most recent hash number change if Lord Farquaad tries to modify a transaction on a preceding page. However, it raises a new issue. how can we know which copy to believe? What's to stop Shrek from going back to page 1 and removing the $2 he sent to Donkey if he has his own copy of the ledger? One solution is that while still attempting to prevent Lord Farquaad from becoming a tyrant, is to form a pool of, say, 8 individuals that have daily votes to choose who gets to write the ledger. Because no single individual can decide to screw up all of the magical creatures, this system is preferable to Lord Farquaad's. If someone tried to cheat, made a mistake, or otherwise messed with the system, the hash of the most recent block would change, exactly like when Lord Farquaad tried to pass himself off as the screenplay writer for the Hot Tub Time Machine. What makes blockchains valuable? The value of blockchain technology is derived from the system's distributed security, and as a result, there are a few qualities that must be present in order to construct or use a blockchain. Peer-to-peer network. There is no requirement for an external or internal trust authority on the blockchain. This is doable because the blockchain data is spread among all users. Every user has their own copy of the transactions and hash blocks, and they broadcast any new transaction information to the whole network. Because the information in the chain is not held by a single entity but by a network of users, it's virtually impossible for anybody to modify it. And even if they somehow do, they'll get caught. Once a block of transactions has been validated, it's added to the chain, and each user's local data is updated. Even if an attacker modifies your local chain, as we showed before with the Shrek analogy, the network will still refuse to accept any blocks from the tampered blockchain. Pretty cool, right? Consensus protocol. But what exactly is a blockchain? Before adding new blocks, users must reach a consensus on the chain's validity. When a user adds a new block, all other users must validate it using a standard protocol. Typically, the users use proof of work or proof of stake methods to gain an agreement on the validity of a new block. The users verify that the new block matches their proof method's requirements, which include transaction validation for all transactions within the block. If the block is genuine, it's added to the blockchain and more blocks are added as needed. Every user basically has their own copy of the blockchain, which they share with other users whenever there is an update. If various users have various chains that appear to be genuine, the shorter chain will be discarded and the longest chain will be chosen as the primary blockchain. In essence, they come to an agreement on the proper chain when at least 2/3 of the total users aren't evil. Blockchain technology is constantly evolving. However, we can identify a few essential pillars that will help to maintain the technology's added value. Users may utilize the blockchain to construct a secure and everlasting system for tracking any type of transaction or data. There is no requirement for an external or internal authority, since each user depends on the technology to reach unanimity and maintain the integrity and validity of the data by following the set criteria. If you found this video helpful, be sure to subscribe to our YouTube channel for future videos. Please leave a comment below to tell us what you think of the blockchain and whether you think it's necessary for crypto trading or not.